Hey guys, Mike here. So hope everybody enjoyed their well-deserved holiday weekend. Now we're back at the grind and stuff. We got this short week coming up this week, so we'll have some more earnings come out, a lot of high beta stuff. More economic data is going to come out here on this short week. And as we know, starting October, so not very far away, not only are we going to start taking on more debt because student loan payments will start. We'll see how many people start paying that, of course. They got like 12 months or whatever it is, start trickling in, but you're also going to have companies, and I'm talking about, wait till you see the numbers of the amount that these companies are going to have to refi over like the next 12 to 24 months. It is amazing to see. Plus, you get to see the mixed results that China is seeing with all that liquidity and QE they're trying to do and stuff. You got two different camps forming here, and I'm going to show you the charts to prove that. And then, of course, we're going to look at some of the other charts, but also look at more short-term and long-term. For some of these major stocks we got coming up here for this month and on out into the future and stuff. So, looking at the debt maturity here that's coming up, you can see 2022, nothing. 2023 this year, quite a bit here. As you can see, it's going to increase 2024, increase 2025, and then start declining after that. And I think the Fed actually knows this. And this isn't just American debt, right? It's Fidelity International reporting this. And if you want an even better picture, I love this picture right here, which breaks this down from US, Europe, and rest of the world. And you can see over the next 12 months, you'll have about 1.8 trillion going to have to be refinanced some which way or another. Next 24 months, 4 trillion, about 18% of the debt. And 36 months, around almost 6.5 trillion. And you can see the amount rated B- and lower. So about 51.2 billion, about 165 billion. And down at the bottom of here, regional breakout as far as US, Europe, and the rest of the world. You can see over the next 12 months, Europe has more than us, and then the rest of the world much lower, and then the US takes over in the next 24 months, and then Europe second, of course. So it's not just us going to have to refinance this debt. So if these rates do stay, even not where they're at now, let's say they drop them down, but there's no reason for them to drop to zero if no recession happens, then that's not good. So you can almost bet money like companies wouldn't mind in a way having a recession so they could just refi at very low rates, but just keep in mind, it's not just us taking on personal debt. It's going to be companies trying to refi these rates. Now, we know China's been obviously doing QE like crazy, pulling out all the stops, trying to sit here and make things better over there and get people to invest. And you can see a huge, huge monthly inflow into this ETF right here. And this ETF in particular, what it does is track the CSI 300 index, which is a weighted index of 300 A-share stocks listed on Shanghai. And so you can see that pump right there. I mean, this goes back to 2012, and it's almost twice as big as any other, just about. But on the flip side, you had a record amount of investors sell onshore stocks, as you can see. That goes back to around 2015. And they sold around 12.3 billion worth of mainland Chinese stocks just last month. And you can't really blame them. And here's one problem, and this is what I keep talking about. I mean, anybody speaks up over there, and again, maybe this is not true, but this got reported, I think it was Friday, and it's like China jails economics professor who highlighted government's personal cost. And he went to trial, and I'm sure it was a fair trial, but he ends up getting 4.5 years in jail for being an outspoken economic professor who had estimated the high personal cost of the Chinese government, finding him guilty of incitement to subvert state power, whatever that means right there. And so, but this is the reason why you don't know if you can trust the numbers. And I'm telling you, that's what I was saying. If I was the CEO of one of these builders over there, I'd have been on a jet way out a long time ago, because those guys are going to, disappear. Who was it? Jack Ma that disappeared or whatever. But over there, you can't take your money out without them knowing about it, because they own the banks too. And so this is the kind of stuff, man, that makes you sick or whatever. And it just makes you wonder, like, how can you trust the numbers? Like their unemployment for their young people, 23%. What do? They cut off the numbers, so you don't know about it anymore. So that's what makes investors very weary about putting their money there, especially long term. And again, remember, some stocks are for rent, and some stocks are there to buy. you got to make up your mind, which one you feel good at doing there. And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And so let me know what you think about that and everything. And also about all that debt that's going to have to be refinanced. Do you think by the time a lot of that comes up, where do you think the rate's going to be? Do you think there is going to be a recession? We know if there is a bad recession, what is the Fed going to do? They're going to drop it down, of course, to zero. That's what they always do, usually during a recession if it's a bad one. So, but if there is no recession and you get this soft landing, the companies, it's going to be very interesting next year, to say the least, when it comes to this refinancing this debt. Now, looking at the major indexes first, here you can see right now that Head and Shoulders, which everybody seems to know about, it's still in the cards, especially when you see the MACD on the bottom right there on the daily. Seems like momentum's turning over. It's struggling to try to get above the zero line right there, but it's turning down. And some people you'll see is floating around are saying this is a cup and handle, right? If you go to the weekly, you can see there's the cup, there's the handle, and you're going to see even bigger breakout. Of course, this is the weekly, so it don't mean they can't be on the daily. Some more downfall, and then we end up coming up, coming back, retesting, and then moving. Another way to look at this is a bull flag, right, on the weekly. And this is the breakout part. So again, timely could be right, and you can see a big, September or whatever. But again, that is a weekly time frame, so a much larger time frame. Q, same thing. Head and Shoulders still there. Got rejected off that trend line we talked about. You see the MACD looks just like it did on the S&P right there. It seems to be trying to roll over and lose momentum. Again, we'll see what happens this week. And if there's a low volume or high volume, we'll have to see. And then, of course, you go, this is the NASDAQ composition, same thing as S&P, right? Bull flag, breakout. And so, again, that's why people, and it would make sense if whether we have a bad September or not. I did a member of videos on this, is, talking about how good the fourth quarter is. So that would make sense, right? And even the IWM, you're starting to see, is that a right shoulder forming over there on the Head and Shoulders as well? Because this one actually performed better than any other index last week. And you can see it has a bullish MACD cross. Hopefully, we can get up above that zero line. That'll be super bullish for it. But again, this is another one of those ones where it's like, so you get over 200, we've seen this movie and see how it plays out. So that leads us into Tesla, of course, who had a terrible Friday, down 5%, rejecting off the 50. And they say it was about the price decrease. They did roll out a new model and stuff, but just a terrible day for it. And again, it was like the MACD's trying to roll over. Again, it's a no man's land almost, because now it's back down below that trend line we talked about, that if it would break above it, it would go 260 quick, which it did. And that was a huge rejection line for it. And so I have to see where they want to settle this out of. Is it going to be the 100? Or are we going to come back down between 208 and 215 again? And so Monday, Tuesday, and Wednesday will tell us a lot about this one. And definitely watch the options market on this one. Now, you would think, see a pop if news is what's driving it, because they come out on the 4th and said, hey, look at the EV deliveries, up 9.3% year over year. In August, they sold 84,159 EVs there in China, which is a 9.3% raise. Also on the Model 3, they actually increased that one by 30.9% from a month earlier. And so Tesla's doing very well in China. So we'll see if that news starts to get it back on course, and see if we can get it back above that trend line again. Now, NVIDIA, this is an interesting thing. I'm just going to ask you, like, how long, or do you ever think this bearish divergence will play out, where, on the chart, it keeps setting higher highs and we get all-time new highs. But, since June, you can see on the daily lower highs, right? And I'm actually going to do a video, because I kept trying to figure out, how they're reporting these numbers, how they do their accounting and all this stuff. Is it double ordering? But I finally found this great piece that I'm going to do a members video on this week, showing them how they account for the revenues and why you didn't see a big increase in cost when you saw revenue go up so much. And then why also, maybe that also leads to why you didn't see a big, to do by Taiwan Semiconductors, who makes most of their chips and stuff. And you didn't see them show the growth in revenue as far as, what you would see in the video. You think you see a little small pop and you didn't see it. So I'm going to explain that to them, let them see it, get their opinion, and then I'll bring some to you guys at some point in time. Now, BABA, this right here, obviously in this triangle right here, and this is how it lows the breakout. But again, it's above the zero line, the MACD. And as soon as we go to probably, I think it's 94, 95 right there. If you see it break this formation, then that's going to be super bullish for it. Again, this is what's it been moving off of. All about the liquidity, all about this QE that China's trying to do. They're pulling all the stops. Again, their economy is hot freaking garbage. That's just the way it is. but the stock market is different, right? And so that's why the stock's moving. That's why all the stocks are moving. That's why a lot of people are putting money into that index, which I showed you earlier, or ETF, excuse me. Now, Shopify, see that trend line right there, which goes quite a ways back? You can see we got rejected on it Friday. It showed great support. It's rejected off of it many times in the past, right? Got that gap right down there below off that Amazon deal that they sprung. The MACD is trying to move above that zero line. And then, of course, it is starting to overbought on the daily. When we go to the hourly, though, to see where we might be heading, because it was such a big move up, and you see that MACD is trying to roll over. It's definitely overbought, that's for sure. So, you know, a pullback would make total sense, right? I mean, again, this is one of those high beta stocks that you've seen it just flies. It was up 10% on the Amazon deal. And so we'll see if that finally gets a nice little pullback right there. Now, AMD is going to be interesting. This is the weekly, right? That trend line, you can see 1, 2, 3, 4 bounces. And this week, to me, is what's going to make it. Like, if it breaks that line, we're obviously going down. 97 should be a target, I would think. And then if we finally break up, obviously it has to break that 110 level, which got rejected the other day. And so I think it's basically going to make us decide which way it's going this week. And when it comes to earnings, there's not a whole lot to speak of until you get to Wednesday, really. And then you'll have, you know, AI spoken about a million times in these calls when it comes to C3 AI, UiPath, okay? And then for those who love GameStop and ChargePoint, they'll be reporting as well. And then you go over to Thursday, and really the only other big one is going to be DocuSign probably. So nothing really is going to move markets in any way, shape, or form. I will be listening to Trip.com Monday because I do want to see, like, hey, we're still traveling, right? I mean, I just got back from a trip, and a lot of you guys probably did too. And we saw a whole bunch of people on the road. So I'm sure we are still traveling. Now, when it comes to economic news, I wouldn't worry about tomorrow, not one single bit. There's really nothing in there should do anything. Come the 6th, which should be Wednesday, I'm going to be off of my days because I keep forgetting the days, even Monday. You'll have S&P Global Composite PMI, S&P Global Services PMI. Then you'll have the ISM data coming out about services, which is going to be big. They're expecting that to drop on the PMI as far as the services are concerned. Then you'll have Thursday, we're going to have initial jobless claims, continuous jobless claims. You can see the numbers to the right. They're expecting these to go up, right, and continue to soften and things. The labor market continue to soften and stuff. So keep an eye on that. A lot of oil and gas stuff coming out there if you like to follow that kind of stuff. And one thing you'll see a lot is a lot of Fed speakers. So you'll have Fed Williams, Fed Bowman. The next day you're going to have Barr out there speaking. Again, no kind of data that should really do a whole lot coming out on Friday, as you can see. So no earnings that are going to move the market. No economic data that should. We'll see if the job market, and people are going to start watching a lot more closely now to see if it's still softening or not, right? Because the last report we just got last week really didn't confirm like what the other ones would confirm, like, oh, we're getting a lot of softening. But then again, you know, they always revise this data the following month, it seems like, and they usually revise it down. Okay, so keep that in mind. And again, you know, remember, you can be short-term bearish, long-term bullish, or short-term bullish, long-term bearish, however you want to put it, which is why I'm showing some hourly charts, weekly charts, and the daily charts and stuff, right? So again, you can have a flat September, somewhat green, somewhat red, and then we go into the fourth quarter, which as the members know is the best quarter of the year. And so we'll see if that plays out. But again, there's a lot of stuff going on, right, that we just have never had happen before. So that's just the kind of stuff we got to see how it's going to play out and stuff. We got to see if China's just going to continue to keep pumping liquidity into their economy and keep, you know, making any cut they can to taxes and everything else, it seems like. So, and if they do that, then, you know, you're going to see that market continue to pump. And that's just the way it's going to be, as long as they don't get any crazy news out of their real estate market and everything. And I'm going to do it when I do a video tomorrow. I'm going to ask you guys a question because I'm curious, because I really don't know the answer to it. And you know, I can Google stuff, but I know we got a lot of people in the community who are bank experts, so to speak, right, and really follow banks and all that stuff. So I'm going to ask them the question and see if I can get an answer to a question that I was thinking about on the road trip back today. So anyway, hope you guys got some out of this. Hope you had a great weekend. I know my weekend was good. Please hit the like and subscribe button if you did. Really appreciate you guys who watching stuff, and I'll see you tomorrow.